Well, good morning. Jagendra Rana here. So, the topic for our discussion today is workman's compensation insurance. Workman's compensation insurance. So, the Employees Compensation Act 1923 is one of the important social security legislations. It aims at providing financial protection to workmen and their dependents in case of accidental injury by means of payment of compensation by the employees. First of all, it is no longer workman compensation policy. It has been renamed as Employees Compensation Insurance Policy. So, by this arrangement, whenever an employee meets with an accident which led to fatal, the employer is liable to pay compensation, and the compensation amount is arrived at by applying the age and his wages as per recent amendment. The wage level is increased to the limit of rupees 15,000 per month. So, as per section 17, the employee has a right to recover compensation from the contractor instead of the principal. So, as of date, now Employees Compensation Act 1923 and Workmen Compensation Act 1923 are the same. Similarly, the Workmen Compensation Insurance or the Employees Compensation Insurance are the same. The only difference is Employees Compensation Insurance is a new name of the policy. So the Employees Compensation Act 1923 is to provide relief to workmen and or their dependents if workman is dead or disabled due to accident arising out of and in the course of employment. The important thing is there are circumstances where could be the personal negligence of the employer, personal negligence of the employees, personal negligence of fellow employees, breach of statutory regulations of Factory Act, like Factory Act, or failure to provide safe place of work by the employer. Under these circumstances, the workman can suffer injury, death, or disablement. Accident means any event which is neither expected nor designed. So, in the course of employment indicates the time when the injury is caused. And out of employment means it refers to the establishes. It refers and establishes the casual connection between the injury and the employment. So, employer's liability arises in case of following circumstances, like to compensate any employee who has suffered an accident arising out of and in the course of employment resulting into death, permanent total disablement, permanent partial disablement, temporary disablement, whether total or partial, or who has contracted an occupational disease. So, important thing is, while taking a quote, while issuing a policy, 4 things are required: number of employees, salary of these employees per month, period of insurance, that is number of months, and out nature of work. All the 4 things are required. Then only the premium can be calculated. So, first 3 things are multiplied, and then according to the nature of work, the rating is applied as per the tariff. So, number of employees into salary of these employees per month, period of insurance into period of insurance, that is number of months. Then rating depends on the nature of work. So, rate quoted in tariff are in rupees per milli, except in certain cases which are rated per capita and apply table A policies. So except in cases which are rated per capita, the premium must be calculated at the book rate on the total earnings up to 18,000 per annum, and for the excess amount, premium shall be calculated at 61 upon 4% of the book rate, subject to minimum rate of rupees 2 per milli per annum, or if not engaged in manual labor and provided all such employees are included at a minimum rate of 1.20 per milli per annum. So this is the kind of tariff given of the employee compensation insurance. So for example, rate applicable to agriculture farm is 5.85 per milli. Rate applicable to all employees traveling in aircraft is 21.40 per milli, like that. So extensions available are medical expenses, that is most important extension. Okay, travel policies may be extended on the following scale: provided for the payment of medical, surgical and hospital expenses. Limit can be opted by the insured. Limit starts from 5,000 to unlimited. Say suppose the insured is opting the limit of 1 lakh rupees per worker. So additional premium is 75% subject to minimum of 200 rupees per person. If limit opted is 5 lakh rupees, in that case 125% of subject to minimum 650 rupees per person. Secondly, the extension for compensation for occupational disease. This is also part of the Act. Here the additional premium of 50% of the book rate is applicable. Though the employer is liable under WC Act to pay compensation for occupational disease, the company does not undertake to indemnify the insured for liability for these diseases. However, it can be covered on additional premium. Similarly, the case with the occupational disease, like these occupational diseases are like infraction, radiation, skin diseases, or lung cancer, hearing impairment, means the diseases which arises due to the occupation of the worker. So it can be covered. Third is subcontractors and his employees, because the contractor may have one or more product sites. If on another product site subcontractor with his labor is working, that can be included in the same policy, provided the wage register and muster roll is available. So that can be covered under the same policy. Now, how the amount of compensation is worked out, that is important, because the amount of compensation payable to the workman depends on nature of injury caused by accident, monthly wages of the workman concerned and the relevant factor. And the relevant factor is specified in Schedule 4 for working out the lump sum amount of compensation. The important thing is there is no distinction between an adult and a minor worker with respect to the amount of compensation. This is the relevant factor chart. Here the compensation amount is given according to age and wages of the worker. Say for example, salary amount for compensation is 15,000 and worker is 40 years of age. In that case, the relevant factor would be 184.17 and the compensation would be 13,81,275. So that is the way these relevant factor charts are given in the Tariff and Act. Minimum age shown is 16 and the maximum is 65. However, under any circumstances, if the minimum age is less than 16, so the relevant factor of 16 years will apply. Similarly, in case the age is more than 65, in that case the relevant factor of 65 years of age will apply. So this is an example for death. Another one is compensation for permanent total disablement. Under any circumstances, the compensation for permanent total disablement would be higher than death, because in case the permanent total disability The worker has lost the body parts totally and permanently, and he is surviving. So the more expenses are required for that. He may not be able to attend his work. Here again the relevant factor is slightly higher. Here, say for example, for the age of 40 years, the relevant factor is the same, 184.17, but the amount of compensation would be 16,57,530 for the worker of the same age of 40 years and same wages of 15,000 rupees per month. So here the compensation would be slightly higher, and same 16 to 65 years, the relevant factor is shown. Compensation of death is calculated on the basis of a formula given in the Act. In case of death resulting from injury, the amount of compensation shall be equal to 50% of monthly wages of the deceased workman multiplied with the relevant factor, or an amount of rupees 1,20,000, whichever is more. And in case of permanent total disablement, the amount of compensation shall be 60% of the monthly wages of the injured workman multiplied by the relevant factor, or rupees 1,40,000, whichever is more. Permanent total disablement means it refers to when you are completely disabled for the rest of your life due to illness and injuries because of which you can no longer work and earn money. For example, loss of limbs, loss of eyesight, paralysis, etc. So calculation of compensation would be like monthly wages is the amount of wages deemed to payable for the month's service, duly taking the average for 12 months. Presently it is 15,000 rupees, and the factor for lump sum payment is based on the completed years of age. Monthly wages means maximum is taken, say for example 15,000. So let us take an example. Completed age is 46 years. Age factor is 166.29. Compensation is 15,000 into 50%. Multiply the relevant factor 166.29, and the compensation payable is 12,47,175. So in case of death, maximum compensation payable is rupees 17.14 lakhs, while in the case of permanent disablement, the maximum compensation payable is rupees 20,56,860. Take another example. Say suppose a workman is employed in a factory on a monthly wage of rupees 3,000. So while working, he met with an accident and dies on October 2000. So his date of birth is July 18, 1970. The amount of compensation payable will be 50% of the monthly wages, that is 3,000, relevant factor of age for 30 years, or 1,20,000, whichever is higher. So 50% of 3,000 means 1,500 multiplied with the relevant factor of 207.98 for the 30 years, and the amount payable is 3,11,970. Since it is more than 1,20,000, the compensation payable to him shall be 3,11,970. So that is the way the amount of compensation is calculated. It depends on the nature of injury, monthly wages of the workman, and the relevant factor. There is no distinction between an adult and a minor worker with respect to the amount of compensation. So in case of death, the amount of compensation payable is 50% to the monthly wages of the deceased workman multiplied by the relevant factor of, or the minimum amount should be 1,20,000, whichever is more. Where the permanent disablement is 60% of the monthly wages, or the minimum is 1,40,000, whichever is higher, whichever is more. And where permanent partial disablement is there, compensation will be payable proportionate to the loss of earning capacity as assessed by a medical practitioner. Because the permanent total disability would be under these circumstances where the complete body part is lost. Loss of sight, both hands, both legs, one hand, one leg, like that. So this comes under the 100% permanent total disability. But in case of permanent partial disability means they are still able to function but not at a full capacity. For example, back injuries, hearing loss, loss of speech, etc. So compensation for permanent partial disablement means the percentage of the compensation which would have been payable for the percentage of loss of earning capacity caused by injury as per the medical report. It could be 90%, it could be 9% only, depending upon the percentage certified by the medical doctor. Compensation is deposited with the Commissioner of Employees Compensation Court. He shall be issuing the sufficient proof of discharge of the employer's liability. Temporary disablement means a condition resulting from unemployment or injury which requires medical treatment and renders an employee, as a result of such injury, temporarily incapable of doing the work which he was doing prior to or at the time of the injury. So compensation payable for the temporary disablement is the amount of compensation as a half monthly payment equal to 25% of monthly wages of the employee. This payment will continue till the disablement continues or a period of 5 years, whichever is shorter. Mode of payment shall be check. Rating rules as per the company. There are certain exclusions because any injury which does not result in fatality or partial disablement for a period exceeding 3 days is excluded. First 3 days of disablement where the total disablement is less than 28 days. So more than 28 days, no deduction. Majorly 3 exclusions are there. That is drink or drugs, disobedience, willful disobedience, or disregard means willful of any safety devices. So 3 Ds are known as the exclusions of the policy. This policy does not cover the natural death. If the employee dies a natural death while on duty, no liability attaches. But when the death of an employee is caused by aggravation of any pre-existing disease due to work, then the death will be deemed to be resulted arising out of employment. So these are the exclusions. One more important question is difference between PA and WC. So even if the personal accident policy is there and that has paid the amount to the victim of the employee or the workman, still he has got the right to claim under the workman compensation insurance, because PA policy is a different kind of policy where the method of deciding the sum insured, method of deciding the compensation and the coverage hours are absolutely different. WC policy covers legal liability towards employees in case of death or injury sustained by them during the course of employment. Premium rate depends upon the nature of duties in which the workers are involved. WC policy are generally issued on unnamed basis. WC is mandatory where ESI is not applicable. So PA policy is a different sort of policy. In PA policy, certain agreed value fits are given as per cover taken, and it's a 24/7 coverage providing policy. There could be a declining list depending upon company to company. Normally the insurers are declining the risk of metal forges and boundaries, blasting and tunneling, chemical industries, working at heights or underground or areas prone to landslide and flooding, or mental labor and around water. So it differs company to company, not common. Documents required for claim are medical certificate, wage certificate, proof of age, detailed version of the accident, etc. So good policy. Thank you very much.